Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. I think that it is time to do a review on names that I have covered in past videos, starting off with Mastercard. Recall that on the 6th of April, I turned bearish on Mastercard over here due to the completion of a rising wedge. Since then, the completion at the end of March, Mastercard went on a rebound, and this is something that I have noted many times before in past videos. After pattern completions, it is common to get corrections, and this move higher is just a correction phase. As long as the pattern is not invalidated, in this case, and advance above the resistance trend line, this will still be viewed as a correction, after which the bearish resumption phase will begin. And this is what I believe Mastercard is undergoing, the bearish resumption phase, seeing how price action has failed to break above the resistance trend line and moving back below the support trend line. Price action has closed below the 20-week simple moving average, and this week appears to have been rejected by the same resistance. Downside is still preferred, and I continue to expect further downside, targeting the textbook target at 432.4. Covered Totalenergies in the video on the 3rd of May and noted that I was ready to cease coverage on this name, but wanted to wait to see if the textbook target at 45.95 is actually reached. Totalenergies since then staged a rebound, but I believe that upside has failed given the latest failure to hold above the 20-week simple moving average. I expect Totalenergies to resume its downside, and let's see if this time it goes to 45.95 or even below. The last time I did a review on Toyota Motor Corp was on the 6th of April, in which I noted that upside was rejected a few more times. This trend thus far has been that upside continually gets rejected. There was a rebound over here after my last review, and while Toyota did manage to close within the cloud twice over here and over here, it just failed to sustain its upside and ended up falling back below the cloud. So the downside is still preferred in Toyota. Closing below the neckline, which is currently around 2,345, will complete this bearish pattern that has a textbook target at 954.4. I last covered Alibaba on the 25th of May and said that it started looking like a cup and handle top a bearish pattern. Since then, Alibaba has slipped below the cloud, giving it a downside bias. The last rebound over here failed to sustain within the cloud, closed below the cloud, and another rebound failed to sustain above the 20-day simple moving average, all of which suggests that downside bias is still preferred. If Alibaba closes below the 95.7 support level, this will complete this bearish pattern that has a textbook target at 45.65. Moving on to names that I will start covering in future videos, starting with the ever-popular Bitcoin. After a few weeks of divergence from the upper Bollinger, I suspect that Bitcoin may be forming a double top, a bearish pattern. It is still in the early phase of development and could be invalidated if price action rises above the 111,995 level. Now, if Bitcoin continues to fall, especially if it closes below the 20-week simple moving average and closes within the Ichimoku cloud, then downside bias will increase. Completion of this bearish pattern is via a close below the support at 74,426.23, and if this happens, Bitcoin will be technically bearish with a textbook target at 39,744. Of course, there is a support at 54,717 that can bounce Bitcoin higher when tested. Moving on to another popular US stock, Home Depot, I suspect that it may be forming a head and shoulders top. It has fallen below the Ichimoku cloud and therefore downside is preferred. Completion of this bearish pattern is via a weekly close below the neckline around 327.43, and the textbook target is at 214.4, but watch out for three supports at 280.1, 270.15, and 250.3, all of which can bounce Home Depot higher when tested. The final name for this video is on Philip Morris, a US listed tobacco company. I believe it is bearish due to the completion of a rising wedge, a bearish pattern. The textbook target is at 158. Now at the bottom of the chart shows the RSI, the relative strength index, and it is in divergence with the price, meaning from middle of February, the RSI is going lower and lower, while the price, as you can see, goes higher and higher. And this divergence usually suggests a near-term reversal in price action, and I believe that it is unraveling right now. Also, Philip Morris closed below the 20-day simple moving average on the 25th of June, tilting the bias to the downside. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.